It's the start of a new week and precious metals are once again taking off, silver nearing $44 an ounce. This doesn't come as a big surprise with the US dollar having its worst year in decades. We're going to talk about this, and Morgan Stanley is now recommending people hold gold in their portfolios. This is big.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. Thank you so much for watching. I do sincerely appreciate it. Take a look at silver sitting at $43.95. It's up 72 cents on the day, a little over 1.5%. We might hit $44 silver, perhaps even as I'm filming this video. Gold is also up big today. It's sitting at $3,738 an ounce. This is a new all-time high for gold. We are in uncharted waters. Gold is up $46 on the day, 1.25%. So this means that silver is moving up faster than gold. We can see that with the gold-silver ratio coming down, although it is still above 80. So I do recommend buying silver over gold at this point. But let's take a look at the dollar. The dollar is moving lower today, although it is still above the lowest point in the 52-week range. So it is not at rock bottom yet, but it is very close. And if you did not know this, the dollar or the USDX is weighted against a basket of 6 other currencies. And those are the euro, Japanese yen, pound sterling, Canadian dollar, Swedish krona, and Swiss franc. Now, I actually looked at the price of silver in all of these other currencies, and what I found surprised me. Believe it or not, silver is currently at an all-time high in 4 of the 6 other currencies, those being the Canadian dollar, the pound sterling, the Swedish krona, and the euro. And in the Swiss franc, silver is at a 14-year high, and in the Japanese yen, silver is at a 45-year high. I think it's helpful to look at silver and other currencies around the world and see how well it's doing, and it's performing extremely well anywhere you go. And when you price silver in dollars, it's no surprise that silver continues to go up because the US dollar is having its worst year in decades. This chart here is put out by the Financial Times. It is the percentage change in the US dollar index for each year up until September 18th. So the dollar is absolutely getting obliterated this year. And in fact, this article points out that the dollar had its worst first half in more than 50 years. So you got to go all the way back to 1973 to see a worse first half of the year for the dollar. And remember, that was just a couple of years after Nixon took the dollar off of the gold standard. So you could say the dollar isn't doing very well this year, and it looks like it's not going to be able to turn things around either. This article here talks about how national interest rates affect currency values and exchange rates, and in it they say that generally higher interest rates increase the value of a country's currency, and conversely lower interest rates tend to be unattractive for foreign investment and decrease the currency's relative value. So because the Fed recently cut rates and it looks like they're going to do more rate cuts in the near future, this means that the dollar is probably going to continue to go down, and we're probably going to see precious metals continue to go up. This could be the reason that the Morgan Stanley CIO, or Chief Information Officer, favors a 60-20-20 portfolio strategy with gold as an inflation hedge, as opposed to the classic 60-40 strategy. Many of you know the 60-40 strategy, and you put 60% of your money in stocks, 40% in bonds, and that's it. But now that Morgan Stanley is calling for a 60-20-20 strategy, you only put 20% of your money in bonds, and the other 20% you put in gold. There has been a lot of talk in investment circles with Morgan Stanley's CIO coming out in favor of a 60-20-20 portfolio strategy with gold as a hedge. So here in this chart, you can see the blue line at the bottom. That is the 60-40 strategy, and it's just slowly creeping up. And the benchmark benchmark is in pink here. That is the S&P 500. So you would think it would be better to just invest in stocks, but the problem with doing that is the drawdowns. The maximum drawdown for the 60/40 is 25%, and with the S&P 500 you're looking at 55%. So it's obviously much more risky to just go with stocks. But then when we look at the annualized return, you can see the 60/40 is going to get you 5.63%, and the S&P 500 10.85%. So you definitely need to weigh your risks. But let's look at the 60/20/20. You can see here the blue line, or the 60/20/20, is doing much better than the 60/40, and in fact it's even beating the S&P 500 at times, although it is slightly more risky than the 60/40. You can see here the maximum drawdown 33.8%, so obviously higher than 25, but look at the annualized return, 9.35%. So it seems like people should have been doing this all along. And to be perfectly honest, I don't know how many people are going to move over to the 60/20/20 strategy, but with Morgan Stanley's chief information officer recommending it, I think a lot more people are going to be investing in gold, and this certainly could have an effect on the price. I mean, we know central banks are buying a lot of gold, but what about the general public? If they all start moving into gold as well, we could see it continue to take off from here. And the thing is, gold is already at an all-time high, and it continues to grow week after week. I mean, look at this one-year chart. A year ago, gold was at $2,600. Now it's over $3,700. We're approaching $3,750. I would not be surprised if we hit that today. And speaking of metals going up, as I mentioned at the start of the video, we might hit $44 silver today as I'm filming. And sure enough, silver is now at $44.01. So there you go. Silver price going up. I mean, this is pretty wild. Usually in the past, I would expect silver to go down on a Monday after it goes up on Friday. But now, Monday after Monday after Monday, when the markets open, we see silver continue to soar. So we're now only like $6 away from a new all-time high in silver. It's already up about $15 year to date. So $6 more does not seem like too far to go until silver hits that new all-time high. And once it does, once it breaks through, then it is off to the races. I think the general public is going to wake up and start buying. So you want to get in before that happens. Of course, I don't know what the future holds. Do your own research. But look, we've got Morgan Stanley now recommending that people buy gold and hold it in their portfolio. So I don't know. What do you guys think? Let me know down below in the comment section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.